Hey everyone, welcome back to Corporate Decoder, the place where we dissect the latest financial filings and let you know if the company is giving you the whole story. Today we're looking at Strategic Student and Senior Housing Trust, Inc., and they've just dropped some news about their estimated share value. Think of it as them giving you a ballpark figure for what their shares are worth. And it is January 2026. Before we dive in, if you like getting straight answers from these often confusing corporate documents, make sure you hit that subscribe button. And if you want to join a community of like-minded investors discussing these kinds of insights, check out our Discord server. The link is in the description below. So what is the big deal? Strategic Student and Senior Housing Trust, Inc. has announced their estimated net asset value per S-share. That is a mouthful, but basically it is their way of saying, here is what we think each of our shares is worth right now based on everything we own and everything we owe. They're doing this to help brokers and financial advisors so they can give you, the investor, a clearer picture of what you hold. This is especially important for retirement accounts where fiduciaries have a duty to know the value of the assets they manage. This valuation was done by Kroll, LLC, a well-known independent firm that specializes in valuing real estate. They looked at the company's properties and liabilities as of the 30th of September 2025 and came up with a figure of $6.37 per S-share. This isn't some made-up number either. They followed specific industry guidelines for valuing non-listed real estate investment trusts or REITs. The company's board of directors reviewed and approved this based on Kroll's report and their own knowledge of the business. Now, let's get into the nitty-gritty of how they arrived at that $6.37 figure. The most important part of understanding a REIT is value is usually its real estate. They own senior housing properties, and their estimated market value for these properties as of the 30th of September 2025 was a hefty $209,600,000. That's nearly $210 million in senior housing, compared to the previous year, the 30th of September 2024, when the value was around $203,100,000. So seeing an increase in the value of their core assets is generally a positive sign. It means their properties are estimated to be worth more. This represents an increase in the total value of the appraised properties over their original purchase and development price. The way Kroll valued these properties was primarily using a discounted cash flow method. This means they looked at the expected future income from these properties, like rent, and then used a discount rate to figure out what that future money is worth today. For these senior housing properties, they used a terminal capitalization rate somewhere between 7.00% and 7.25%. With a weighted average of 7.09%, they also used a discount rate between 8.50% and 8.75%, averaging out to 8.59%. Think of the discount rate as the return an investor would expect to get for taking on the risk of owning these properties. A lower discount rate means a higher property value and vice versa. They also factored in an annual rent growth rate from 3.00% to 6.50%, averaging 5.13%. Now, this is where things get interesting. What happens if these assumptions change? The report tells us that if the terminal capitalization rate dropped by just 50 basis points, meaning 0.5%, the property value could jump to around $226 million. Conversely, if that rate increased by 50 basis points, the value could drop to about $203.6 million. That is a significant swing, highlighting how sensitive these valuations can be to market expectations. A similar sensitivity was noted for the discount rate. A 0.5% decrease in the discount rate could boost property values to about $214.1 million, while an increase would bring it down to around $205.5 million. It really shows how much these seemingly small percentage changes can impact the overall estimated worth. Now, let's talk about the other side of the coin, liabilities. Their debt is estimated at roughly $101.8 million. This is pretty much in line with the principal balances outstanding, meaning the debt is valued at what they actually owe on it. They also have other liabilities like accounts payable and accrued expenses. And importantly, distributions payable, which are distributions they owe to shareholders. When you take all the assets and subtract all the liabilities, you get the net asset value. As of the 30th of September 2025, the company's total net asset value was about $83,510,519. Now let's break that down by share class. For class of shares, the NAV per S-share is $6.37. Class T shares also come in at $6.37 per S-share. Same for Class W, Class Y, and Class Z shares. All classes are reported at the same NAV per S-share. This is the figure they're reporting to help investors understand the underlying value of their holdings, and it is a slight increase from the $6.35. per S-Hair reported as of the 30th of September 2024. But here is a crucial point, and the company is very clear about this. This estimated value per S-Hair is not audited. It is not the official accounting value, and it is definitely not what you'd get if you tried to sell all the company's assets tomorrow and pay off all its debts. They explicitly state that a stockholder can't be guaranteed to resell their shares at this estimated NAV, nor can they be sure they'll get this amount back upon liquidation or sale of the company. Markets fluctuate, and these estimates are based on specific assumptions. The company also includes a standard cautionary note about forward-looking statements. They're basically saying that any statements about the future, like their plans or prospects, are just educated guesses. Actual results could be very different due to various risks and uncertainties. They aren't guaranteeing future performance, and they don't intend to update these statements publicly if things change. It is like saying, we hope this happens, but don't hold us to it if it doesn't. Finally, under the exhibits, they've included the consent of Kroll LLC. This is essentially Kroll saying, yes, we did this valuation, and we allow our name to be used in this filing. Looking at this filing, Strategic Student and Senior Housing Trust, Inc. is presenting a picture of steady, albeit modest, growth in their estimated net asset value. The increase in their senior housing properties estimated value is a positive indicator, suggesting their core assets are appreciating. The engagement of an independent firm like Kroll lends credibility to their valuation. However, the disclaimer about the estimated NAV not being an audited figure or a liquidation value is critical. Investors should understand that this $6.37 is an estimate, highly dependent on the assumptions made about future cash flows, market conditions, and interest rates. The sensitivity analysis they provided on capitalization and discount rates is a good illustration of how significant changes in these factors could impact the reported value. The risks highlighted in the cautionary statements are also important to consider. While the company is providing this information to aid investors and fiduciaries, it is essential to remember that the real estate market, and by extension REIT values, can be quite volatile. Overall, Strategic Student and Senior Housing Trust, Inc. appears to be navigating the current real estate environment with a focus on its senior housing portfolio. The estimated NAV suggests a stable underlying value, but investors should remain cautious and understand the limitations of this figure. The company's direction seems to be one of careful management and reporting, but the true test will be how these estimated values translate into actual performance and shareholder returns over time, especially in the face of potential economic shifts. Alright? That is our breakdown of Strategic Student and Senior Housing Trust, Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the estimated NAV is a reliable indicator? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And don't forget to subscribe for more deep dives into corporate finance, and for those of you who want to connect with a community of savvy investors and discuss these insights further, join our Discord server. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.